Yo, this is Kieran for GOST, which is getting our shit together. I'm really lucky to be joined by my actual buddy, Suraj, who works at a spread betting firm, which is in the financial sector, and he can tell us all a little bit about that. Obviously, we've just been hearing in the news about the GameStop situation that's going on there. And so obviously GOST breaking the news a week late again. But yeah, Suraj, thanks for being here, man.
Yeah, no problem. Nice to be here.
Yeah, good man. All right, so yeah, just explain a little bit about what you do in your day job. What is that?
Well, I'm actually Director of Investment Brokerage. We offer CFDs, which are contracts for difference. Spread betting is a similar type of product. So a lot of our similar type of firms will offer both. We only offer one, which is CFDs, just licensing and things like that. But I'm generally more involved with the compliance side. I'm a director and I'm the head of compliance. So those are generally my roles, and I focus more on the regulatory aspects, making sure the firm's in line with rules, laws, regulation. There's good conduct, good culture. That's kind of my job, to focus on that type of stuff, really.
You're the compliance czar there, aren't you?
Sorry?
You're the compliance czar, like the man who sorts out all the compliance. So what's like just a real layman's understanding of like what sort of clients would come to you? What's the service your company provides?
Well, my brokerage is pretty much anyone. So we deal with, well, not anyone, we deal with retail clients. So that's just the individual investor. So that's the term for just like myself, yourself, just anyone on the Clapham bus or whatever. So generally that type of business. So we deal to, I guess similar to what Robinhood does in America, similar to like that, obviously on a much smaller scale. And we're based across Europe. But yeah, generally most people who want access to the markets, they can come and trade with us. We don't actually provide any investment advice. We don't manage anything. We're just execution only. So we provide the technology to the clients. You can log in, create your log into our platform, and then trade the markets.
Okay, cool. So all right, yeah. So it's a tool by which retail investors can play the markets, right? And that's all markets. Is that NASDAQ? I mean, tell me a little bit more.
Yeah, I mean, it depends on your brokerage. Most brokerages, offer the main markets. We offer, for example, American, indices like you just stated, like NASDAQ, European indices, Hong Kong, Asian markets, things like that as well. But yeah, stocks are all across the board. But like I said, we're a derivative firm, so our products aren't actually straight stocks. They're a derivative of a stock. So it's kind of like a product where the price is derived from the actual underlying stock. So say you have Apple, the price of Apple, that will, our product will mimic the price of Apple, but ours are leveraged products and then margin products. So you don't actually have to put down the whole investment to gain exposure to the risk in effect. Or a simpler, more layman terms would be, you just gain exposure to the same larger investment with a much smaller, deposit in effect.
Okay, cool. All right. So we're talking about GameStop for a second. What was your understanding of exactly what happened there? Because I'm sure there's still some people who've seen it in the news, don't exactly understand what happened. What was the power play behind that?
So I guess the reason it made the news to a certain degree, and it's taken off so widely, is because it's the retail investor kind of pushing back against the institutional hedge funds. Yep. So generally, the hedge funds sometimes are seen to determine pricing or shorting certain stocks and companies. Here, what's happened is retail investors, people across America mainly initially, through Reddit and other forums, have started building momentum in rallying people to invest and purchase certain stocks. So one of those stocks being GameStop, which by the kind of financial outlook of the market, with the pandemic, COVID, everything like that, was or is meant to be going under in maybe within this year, realistically.
Right. Okay, cool. And so why is it kind of a historic thing? Because retail
it's the first time retail investors have kind of banded together like this, and they've actually been able to substantially move certain markets. So certain stocks, it wasn't just GameStop. There was AMC. I think there's some movement on the other stocks like Nokia. There was a big push on silver last week as well. things like that. So they've actually managed to move markets that have billions in market cap, and they've managed to move them as institutional kind of firms used to previously do, or are seen as the only ones who generally do that kind of thing.
So then this is a good thing, basically. This is more power to the people or not?
I mean, it depends how you want to look at it. Yeah, I guess it's power to the people. I mean, they should be allowed to have access to the markets and trade as they want.
Right.
Obviously, before there's quite a big disparity in the resource, technology, research, things that investment firms or big hedge funds or institutions have, which myself and yourself would not have access to. But in this day and age, all that information is more available, or more readily available. Like, we can go buy investor reports for maybe £200-300 or £1,000 or something like that.
Yeah.
So I guess, it's just kind of, I think it's just put into people's minds the ability that they do have some effect, some impact on the market. And I guess this kind of raises, well, initially you could say it was increasing retail confidence in the markets, the ability, individuals seeing their ability to move.
But obviously we're seeing a pushback from, I guess, what you'd say, those in power, the regulatory bodies. Because, I mean, to go into that a little bit. So Robinhood, what is Robinhood?
So I guess Robinhood is just an investment brokerage in America, in the States. Yeah. They provide easy access to the markets for retail investors. So like I said, retail markets like myself, yourself.
Right.
So we can log in through our phones. So it's like pretty much at the touch of in your hands. Yeah. You just log in, deposit, and then purchase whichever stocks you want.
Okay. Cool. And so they're in hot water now because they they stopped people being allowed to buy more stocks of Gamestop, right?
Well, yeah, they basically shut down their platform to retail investors. They said, you can't buy any more GameStop. They shut the market off. I think they may have even stopped taking on new clients during the time as well.
Right. Yeah.
So you're not opening up any new accounts, not giving any further, market access to retail investors.
Okay, so it's like a really interesting sort of situation. But what's going to happen here? Because I mentioned to you before the call that the House Financial Services Committee is going to take the Robinhood CEO, who is Vlad Tenev, and having testified in front of them, and that's headed up by Maxine Waters. She's also asked if she can get Keith Gill, who is the guy who basically made all this frenzy on the Reddit forums, and he was the real guy, sort of leader pushing this all through. So it's interesting, right? Because you're seeing parts of the power structure push back and say, actually, the little guys try to have this little sort of financial revolt, and we're going to have to do something about that. We're going to have to change the market to maybe make sure that doesn't happen again. But also, you're seeing Maxine Waters, Democrat. You're seeing government bodies saying, well, actually, okay, let's have a hearing about this and find out what's going on. So you find that pretty interesting?
Yeah,
what do you expect to happen is what I'm asking.
I don't know, it's a good question, isn't it? I know. Well, I guess the reason they have to be seen to be taking action is because it's just, it pretty much affects the majority of people in America. I think, everyone was watching this so closely. A lot of people, a lot of individuals were investing, especially after the stimulus checks and things like that. Everyone's got their eyes on it. So to not take any action or not even investigate it probably would be seen as, not great in the eyes of.
Sure. But I mean, so I've also heard that Robinhood had financial pressure because you're talking about shorts here. So obviously the amount that people can lose can be infinite, right? Because it can just, unlike going long on investment, the worst thing that can happen is the stock value goes to zero, you lose the investment you put in. But for shorting something, you are betting that the stock is going to go down. So if it continues to go up, your losses can potentially.
Yeah, sure. I guess there's, the upside is, well, I wouldn't say infinite. It depends on the amount of shares out in the market. But yeah, right. To a certain degree, the price can go very high. And if you're shorting it, for example, it's harder to manage risk because you don't know the top level or limit what it's going to reach. Well, like you said, if you are long, then the worst that can happen is you lose everything you've invested and it goes to zero.
Yeah. So that is definitely the worst. Just for a layman like me, that's the worst thing that can happen. You can't get into debt from a.
it depends what products and exposure you have. For example, the products that we offer, CFDs, prior to ESMA regulation, it was
Yeah.
possible for your account to go negative, so you could actually lose more than you invested.
Right.
That was the case for certain investments and certain products. That's why you have to be careful with what you're investing in and know and research what you're doing.
Sure.
But
And
generally
obviously,
for stocks, where it's
okay,
like,
obviously, just disclaimer. Obviously, me or Ghost, we're no financial experts. Obviously, you are to an extent, and you've played the market yourself a little bit, right?
I trade a little bit. Probably not that successfully, but it's more of a learning curve. But I've been playing it, especially the last year with COVID going on. The market's been very volatile. It's been quite easy to speculate what kind of markets and industries would be hit. So a lot more people have been sitting there with everyone being at home as well. Some people furloughed, some people not working. A lot more people have time on their hands to actually invest in building up some kind of second income, or just looking at or getting
the amount of retail investors has gone up because obviously people have got time on their hands. Maybe they're getting a stimulus check, and also, like you say, you can sort of work out what might happen in the market, right? Like streaming companies you'd expect to go up, and then
exactly. So, there's like airlines, for example, are a big one we've seen. Retail industry, like shops like GameStop, for example, where they're based in malls in America where there's no footfall at the moment, so they don't really have that much of an online presence as far as I'm aware. I may be completely mistaken there though.
No, I think that's basically right. Yeah.
So it's easier to kind of for the retail investor to kind of see what's going on during these times, I'd say.
And so what would anyone who's looking to dabble a little bit as a retail investor, which again just means a regular person betting on the market, what tips would you give?
I don't know, I'd say do your research, look into the product you're going to be trading with. For example, CFDs and spread betting is generally seen, their products are seen as far more riskier than normal stocks and shares. So, gauge your risk tolerance, research the products. All these companies will have, a lot of information on their websites because they're all regulated. So, you can, they have like key information documents, things like that you can read over. And once you've done that, I guess, maybe look at an area or industry that you're interested in or something like that, and then maybe focus on one area or one market and then slowly branch out, something like that. A lot of firms offer demo accounts and stuff as well, so you can practice on them free.
They say there's practice accounts, so you're going through the motions, you're not actually.
You can load up with like £20,000 of fake cash and then just trade it as you would and see how you do and things like that.
Right. Okay, that's a good way to start, I guess. And is there a resource that people can go to that sort of congregates lots of information about how to get started or anything like that? Is there? I mean, say if you're going to look into buying some stock, where would you go to look at it?
I guess for just straight out stocks and shares, a lot of different banks actually offer that to their clients. You can get trading accounts or share accounts, share ISA accounts, things like that. Where you can purchase certain stocks, or they'll provide you with a list of stocks you have access to, and you can pick if you want to invest in them. I know that Revolut has also started doing stock trading, things like that. So. And a lot of this is quite easily accessible once you've set up the account or anything like that. It's all done by your phone now, so it's relatively easy.
Interesting. And do you know anything about, because silver is in the news at the moment, right? Do you know anything about this? Because obviously the theory that I've heard is that this is a way that the hedge funds and the power players here are trying to pump artificially, like GameStop was artificially pumped up higher than its actual value. They're trying to do the same for silver to recuperate some of their losses. Basically, effectively just trying to con the little guy into getting their money back.
Sure. So to be fair, I've been really busy with work in the market.
Yeah.
I thought it was actually the other way around, with the Reddit users pushing up the market silver.
So well, this is it. So clearly I need to look more into this. I guess they're calling it both ways. Well, it's just a fascinating situation, isn't it? Because
what I do know is that the market did last week go up 10%, just off the back of these type of rumors or whatever. It's come off since. It's back down roughly the same amount to where it started within a week.
Right.
But that was an unprecedented move, which was caused by Reddit forums or the institutions pushing back. It was like an unusual market movement, you'd say.
Right.
solely off the back of that. There was no other external factors that would have or should have caused silver to rise, if you get what I mean.
Yeah, I do. Yeah. So, I mean, just it's quite interesting, isn't it? Because a lot of people are saying this situation it harkens back to 2008 and the collapse. And obviously it's not as big a deal as that, but it's like there's a hint that there might be market manipulation involved, and it's just a serious situation. And obviously your job is probably partially there because of 2008, right? Certainly compliance is more in everyone's mind because of that crash. So is there anything, do you get a sense of any sort of trends that are bubbling underneath in the financial world or anything like that?
I mean, it's not that easy to kind of gauge, especially with my role doesn't really focus too much on the markets. I'm more, setting up systems and controls within firms.
Yeah.
Or malpractice, or things that happened in 2008 to a certain degree don't happen again. But yeah, you are right in the sense that compliance has evolved massively since 2008. The regulator has become a lot, well, I wouldn't say a lot stricter. They split into two. So there's the PRA and the FCA now. So there's two bodies, one for the big institutional banks, which is the PRA, and all the systemic firms, you'd say, ones if they went down really impact the whole economy. So they generally regulate that. The FCA does both small brokerages and like insurance firms, smaller firms, all that type of stuff, along with the banks as well. But yeah, a lot of this is post 2008. Hopefully, these measures have been implemented, like capital and risk management is probably a big thing. So hopefully, all that regulation and stuff like that would hopefully prevent, a future financial crisis happening.
Right. Are you confident in that?
I mean, it depends. Yeah, I'd say relatively. There are certain things like people are held more accountable. I know, for example, in the UK they are now. Right. Obviously, there's completely different regulation in different countries. There's like room for arbitrage in a way, I guess. Something you could probably do in America, you may not be able to do here. Yeah. The FCA seems probably the strictest and one of the best regulators across the world. So generally, the UK financial markets are in a good strong position, pre-Brexit, because of the regulator. It was seen as a symbol of customer confidence in a way, being regulated by them.
Okay, well, it's interesting. It's an interesting look. I'm glad that I've got friends like you I can go to, bend your ear a little bit, find out more. But so you've heard it here first. This is the Ghost breaking 7-day-old story about GameStop. So invest in silver, invest in GameStop, invest in Dogecoin, invest in Ghost with your time and your clicks. No, all right, well, good chatting with you, Suraj. And yeah, your personality suits compliance quite well, doesn't it? You're quite a stiff guy.
Cheers, thanks.
Yeah, no worries. All right, man, good stuff.